Everyone, welcome back to my channel. It's Nazar Pradashia back with another video. So today we're going to be talking about China's new stock exchange plans set to be in Beijing. So before we begin, I want to say I'm not a financial advisor and we should always do your own due diligence and we should support part of any investment scheme. Let's get into it. So China will set up a new stock exchange in Beijing, giving the nation's capital and political center more influence in the world of business and finance. President Xi Jinping announced the Beijing-based exchange at the International Trade Fair on Thursday, saying that he wanted to create a venue for service-oriented and innovative businesses. He did not say, however, when the exchange would be established, though. China, on the other hand, as a whole, already has two stock exchanges on the mainland, but they're located in Shanghai and Shenzhen, far away from Beijing. The Shanghai Stock Exchange, which was established in 1990, hosts mostly large cap companies, including like state-owned enterprises, banks, energy firms, all those big bad businesses. So the Shenzhen Stock Exchange is a bigger proportion of tech companies and small or medium-sized firms. There's also the Hong Kong Stock Exchange, but it's subject to its own rules, regulations, and it's free of like Beijing's capital controls. Okay, so let's also talk about how this Chinese government's regulatory crackdown will affect the stock exchange and large private companies. So the move comes as Chinese government regulatory crackdown on large private companies intensifies. So basically, that's one of the main reasons why they're creating a new stock exchange. And Beijing has been working for nearly a year to rein in their power and influence. And it's being announced as Chinese companies face regulatory hurdles as they try to raise money in the United States. Pressure is coming from Chinese authorities who are increasingly upset about tech firms going public overseas because of concerns about whether they could give foreign governments access to sensitive user data. Let's see what's more. So let me just share my screen. Okay, so it's all U.S. regulators have stepped up scrutiny on Chinese IPOs and required stricter disclosures about potential risks. It's also the second time Xi has personally announced a stock market initiative. So China's plans to not launch a new exchange in Beijing, announced by President Xi Jinping on Thursday, boosted shares in Chinese brokerages, but knocked down Shenzhen startup board Chinext and shares of Hong Kong's bourse amid fears of rising competition. Although China's securities regulators said the planned Beijing Stock Exchange is based on the city's existing new third board and complements Shanghai and Shenzhen bourses, some fear a rivalry for listing resources is inevitable. The Beijing Stock Exchange is equal footing with Shanghai and Shenzhen bourses. If it prospers, the three will share the market in tripartite confrontation, wrote Rock Jin, economist and CEO of investment advisor Pop Eaton. So basically, in summary, what this is saying is that the Beijing indexes will be created in the future. Shenzhen and Shanghai indexes will all rival each other, and they're scared of that. And for like listing resources, those are the rival for listing resources, other resources, and rising competition will happen. And I can see that happening though. But this is my opinion and not financial advice. Please do your own research. Okay, next article, I'll share it. Okay, thank you for waiting patiently. So China's President Xi Jinping said the country would set up a stock exchange to serve small and medium-sized enterprises. Mainland China's two main stocks, Shanghai Stock Exchanges Shanghai and Shenzhen on the main border with Hong Kong are the financial hub. In a video addressed at the opening of the China International Fair for Trade and Services, she said China will continue to support the innovation-driven development of SMEs, small businesses. So this will be done by deepening the reform of the new third board and setting up the Beijing Stock Exchange as a primary platform serving innovative-oriented SMEs, he added. Okay. Next. China's stock trading volume surged above 1 trillion yuan for weeks up as other investment options dry up. Chinese investors are turning to mainland Chinese stocks called A-shares as other investment options like real estate come under tighter government scrutiny. Stock trading volume has held above 1 trillion yuan for that's $154.56 billion. For the last 6 weeks, it hit a high for the year on Wednesday, according to Wind Information. Speculating on real estate is definitely out of play, Sheling Xie, senior analyst at Stansberry China, said in Mandarin, according to a CNBC translation. Since Chinese authorities tightened a ban on cryptocurrency transactions this year, where does the money go? So, in conclusion, the possible concerns for the Beijing Stock Exchange, if it will be created, is the competition for listing resources between Shanghai, Shenzhen, and Beijing. Those three stock exchanges might have trouble with competing for listing resources, and we fear a rivalry, but that's my opinion. Please do your own research. And also, they fear the tightened scrutiny of the Chinese government. Everybody fears actually, that the Chinese government will scrutinize and keep a close watch on the Beijing Stock Exchange also. But that is the main reason why they are creating it, to avoid scrutiny, as is with the Hong Kong index. So thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. If you made it till the end of this video, for one of those lovely, beautiful people, thank you. Please remember to subscribe, and that's also your cue to comment Power Puff in the comments below. Thank you guys, and see you later. Bye.